Welcome all Rem Channel clients and all our prospective clients. We are proud to present our podcast for the analysis of the Namibia banking and financial services sector remuneration trends as at October 2018. We hope you enjoy the presentation and we trust this will give you an insight into the current remuneration trends for the industry. Today we will discuss the following topics: the big picture of rewards and benefits, a Rem Channel recap, the Rem trends for the industry, some survey administrative notes and reminders, finally an introduction of our people and organization team at PwC. The big picture. Where does it all fit in? Remuneration and reward is all very well in terms of what you pay, how you pay, and how much you pay. But if these payments are not done in line with your business strategy and operational needs, you might run into trouble. It is therefore always important to consider the total rewards model in your strategy. This diagram illustrates the Rem Channel reward model. A reward model is embodied in an organization's reward philosophy. A reward philosophy normally consists of a set of beliefs which underpin the reward strategy of an organization. It governs the reward policies and it provides guiding principles which determine how the reward process operates and also determines pay decisions in the organization. This model demonstrates the various aspects of reward. On the left, remuneration and benefits, which consist of fixed and variable remuneration. Fixed remuneration is referred to as the salary we pay employees, including medical and retirement benefits and all other benefits like leave. The fixed remuneration is determined using pay structures developed around a grade structure. Variable remuneration can consist of short and long-term incentives which assist to promote a pay-for-performance culture. On the right, we have the reward environment, which include the aspects of how an employee relates to an organization, team, and direct management, as well as his own job. The character, reputation, brand, and achievements of an organization form a big part of the reward environment. Relationships, teamwork, and support from the team is critical to an employee association with the organization. Lastly, employees need meaningful work and recognition for achievement and contributions made in the organization. An employee's well-being is vital in the reward environment and will influence and prove as the result of the impact of the organizational reward strategy. Combining all of these aspects of reward will significantly influence an employee decision to join and stay with a firm or even leave a firm. Next, we will take you through a recap of Rem Channel, Namibia's largest online salary survey. Rem Channel is hosted and administered by a dedicated Namibia team for more than 7 years. We currently have over 100 subscribed participants in the survey, some who still need to upload, being new joiners. The survey enables the subscriber to extract customized reports on salary data in the Namibian market. The survey currently runs in all of the SADC countries: Namibia, South Africa, Botswana, Swaziland, and Lesotho. The survey has over 60,000 data points and 500 market positions. The data is compiled from actual payroll dumps and published monthly, so is therefore accurate, up-to-date actual salary data. Rigorous testing is performed on the data collected, which makes it reliable. The survey runs 24/7, 365 days a year. The health of the survey is dependent on the consistent number of participants and data. During the last 12 months, we have had some drop-offs due to financial and budgetary limitations. However, we are experiencing a turnaround with several new subscribers who are in the process of joining and therefore adding valuable data to the survey. Now the source of the data in our PwC Rem Channel survey. Here you can view the list of participants for the Namibian banking and retail banking sector. Within the Namibia banking and retail banking sector, we have 7 and 4 active participants respectively. Namely, within the Namibia banking circle, we have Agricultural Bank of Namibia, Bank of Namibia, Bank Windhoek, FNB Namibia, Letshego Bank Namibia, Nedbank Namibia, and Standard Bank Namibia. In the Namibia retail banking, we have Bank Windhoek, FNB Namibia Holdings, Nedbank Namibia, and Standard Bank Namibia. Some participants may appear on both the Namibia banking and Namibia retail banking participant lists. Reason being that participants can obtain access to more than one industry-specific circle. Here you can view the list of participants for the Namibia Financial Services and Financial Services Private Sector. Within the Namibia Financial Services and Financial Services Private Sector, we have 23 and 14 active participants respectively, namely Afrocentric Health Namibia, Agricultural Bank of Namibia, Alexander Forbes Namibia, Bank of Namibia, Bank Windhoek, Deloitte Namibia, FNB Namibia, Government Institutions Pension Fund, Letshego Bank Namibia, Motor Vehicle Accident Fund of Namibia, NAMCLEAR, Namibia Financial Institutions Supervisory Authority, Namibia National Reinsurance Corporation, Namibia Post Limited, Namibian Stock Exchange, NamPost Financial Brokers, National Housing Enterprises, Nedbank Namibia, PricewaterhouseCoopers, Retirement Fund Solutions Namibia, Sanlam Namibia, Sanlam Limited Namibia, and Standard Bank Namibia. Some participants might be on both Namibia Financial Services and Financial Services Private Sector, as participants can obtain access to more than one industry-specific circle. Rem Channel Namibia currently has 16 active industry circles. There are some overlap across some of the industry circles, for example, mining with manufacturing, banking with financial services, etc. All the circles make up the national database. Therefore, the national industry encompasses all the data points across all the different industries. Upon joining, the participant's data will automatically become part of the national circle, and the participant will have access to the circle typically where one would benchmark the generic positions, for example, HR, finance, marketing, etc., against the national market. Furthermore, the participant's data will automatically become part of the industry-specific circle as selected during signing up and have access to benchmark against this specific industry circle. Typically, this would be the core business of the participant, for example, mining, retail, tertiary education, etc. A participant may, however, belong to further industry-specific circles at an additional cost. When a participant requests to be part of a circle that is not their primary industry, all the participants in this circle must grant their permission for this company to become a part of the industry circle. We're currently targeting the hospitality and short-term insurance industries. If we look at the circles that we already have in the industry, we could look at public-private, public sector, with their tiers 2 and 3, retail banking, fast-moving consumer goods, technical, mining, financial services, manufacturing, financial services private sector, and health and education. In comparing salary data in the survey, we look at all the remuneration which make up total guaranteed components. The items included in total package are all payment and benefits of a fixed and regular nature, and the values can be determined. Employees will be entitled to this payment when they show up for work. These items include basic cash, annual guaranteed package or 13th check, pension and provident and medical contributions, company car benefit, housing allowance, subsidies free or cheap housing, other cash benefits, any other cash paid through the payroll which is not already catered elsewhere, telephone, tool or computer allowances, car or travel allowances, entertainment allowances, and other non-cash benefits. Any other non-cash benefit which can be converted to a cash value. Please note that even if your company does not apply the TGP principle, the data we will collect and use to compare in the market will still relate to TGP, so as to have a more accurate picture of the actual remuneration and benefits paid in the market. Let's have a look at how TGP practice is applied in the market. It is important for us employers to educate employees to understand the TGP principles. Reason being is so that they know what to look out for should they want to leave or join a company. In a situation where they are offered 1,000 Namibian dollars more in basic cash, the question they should be asking is whether the 1,000 Namibian dollars is worth more if considering the total benefits offered. Unintended consequence of TGP practice is that people do not look at the total value of benefits. Here we have an illustration of three companies under total pay structures. Company A is a retail type company. There is a large variable component with very little benefit covered by the company. Therefore, the employee has to pay everything from the basic salary. The variable component is not received every month, thus it is not reliable. The risk appetite of the employee is considered here. Company B is a typical government structure where benefits are great, but people do not know its worth. Education is key on how much they would pay for these benefits should they leave this company. Company C is a typical private sector company where the essential benefits are covered, but the employee must cover the rest from their basic salary. The performance element is depending on the market, and the company performance is not guaranteed. Based on the current information available on REM channel, 71% of general and unionized staff are on basic plus remuneration structures in the banking sector. We can note that the banking industry is highly influenced by unions. For the unionized staff, it offers an opportunity to negotiate on benefits, therefore creating the illusion that this remuneration approach creates more bargaining power. From the figures above, it is evident that the majority of management and executives are on TGP. The market trend is that TGP is used for employees with allowances, which tends to be on this level. TGP allows for easier market comparisons, more individual package structure flexibility, and thus is becoming the market trend. On the other hand, in the retail banking sector, all general and unionized staff are on basic plus remuneration structures, also indicating that this sector is highly influenced by unions. All management and executives are on TGP, following the market trend that TGP is used for employees with allowances which tend to be on this level. When looking at the Namibia financial services sector, 50% of the general staff and 73% of the unionized staff are also on basic plus benefits remuneration structures in the financial services sector. As with the banking industry, we note that the financial services is also highly influenced by unions. Again, this creates the illusion that this remuneration approach creates more bargaining power. The majority of management and executives are on TGP, following the same market trend as the banking sector for employees on this level. In the financial services private sector, we note that 86% of the unionized staff are on basic plus benefit structures. On the other hand, more than half of the general staff, management, and executives are on TGP. This is a good indication that the financial services private sector is following the market trend that TGP is used for employees who receive benefits. As mentioned before, TGP allows for easier market comparisons, more individual package structure, and flexibility. In the banking sector, the staff packages consist of an average of very little car and travel benefits that were captured and almost no other non-cash benefits. Because there isn't really much of a tax benefit for vehicle allowances, employees do not tend to structure towards vehicle benefits. Concerning is the percentage going to retirement funding on general staff level. Shouldn't this be at least 10%? We also see low housing allowance of 11% for management and only 6% for general staff. However, the market practice is between 25 and 30%. This is an area which can be improved. We all have housing expenses and can receive a tax benefit here. Management packages we see, the car benefits more than the staff, as this could be a prerequisite for performing their work. Retirement is still found to be low at 8% and very little differentiation between staff and management levels. In the retail banking sector, the staff packages consist of an average of very little car and travel benefits that were also captured here, and barely any other non-cash benefits. Also concerning is the percentage going to the retirement funding on general staff level. Low housing allowances of 11% for management and only 5% for general staff were captured. Management packages we see, the car benefits are also more than the staff, and retirement funding is still to be low at 8%. And again, very little differentiation can be seen between staff and management levels. We can see that the same TGP components and composition trend applies in the financial services sector as with the banking sector. These staff packages also consist of an average of very little car and travel benefits and almost no other non-cash benefits. Again, because there isn't really much of a tax benefit for vehicle allowances, employees do not tend to structure towards this benefit. The percentage going to retirement funding on general staff level is low here as well. Low housing allowances of 11% for management and 8% for general staff were captured respectively. However, the market practice is between 25 to 30%. Management packages we see, the car benefit is more than the staff, as this could be a prerequisite for performing their work. Retirement funding is also found to be low at 8%. Also, very little differentiation is seen between staff and management levels. We can see that the same TGP components and composition trend applies in the financial services sector as with the banking sector. These staff packages also consist of an average of very little car and travel benefits were captured and almost no other non-cash benefits. Again, because there isn't really much of a tax benefit for vehicle allowances, employees do not tend to structure towards this benefit. Concerning is the percentage going to retirement funding on general staff level. Shouldn't this be at least 10%? We also see housing allowances of 11% for management and 6% for general staff respectively. However, the market practice is between 25 to 30%. This is an area which can be improved. We all have housing expenses and we can receive a tax benefit here. Management packages we see, the car benefits are more than the staff, as this could be a prerequisite for performing their work. Retirement is still found to be low at 8%. Very little differentiation between staff and management levels. Remuneration trends. We all know that the drive behind annual increases are not always singular. Various elements contribute to salary and wage increases. Elements include union negotiations, individual and company performance, economic forecasts and affordability, historic increases, industry comparisons, and market benchmarks, and many more. The current inflation for September 2018 was reported at 4.8%. The average over the past 6 months of the first 2 quarters of the year was 4.2%, which gives us a 12-month average inflation of 4.3%. All in all, almost half the inflation this time last year. So what are your experience in this area? What drives your increases? Next, we will have a look at the reported increments for the industries. Here we have the mandated pay adjustments for executives and management from our survey data for the banking industry. Each participant is required to complete a questionnaire which asks what the increases were for the past 12 months and what their budgeted or mandated increases are for the next 12 months. Over the past 12 months, the Namibia banking sector granted an average increase of 6.5% for management and an average increase of 6.7% for executives. The sector anticipates an average increase of 6.6% for both executives and management for the next 12 months. On the other hand, the Namibia retail banking sector granted an increase at 6.5% for management and executives over the past 12 months, which is slightly less in comparison to the Namibian banking sector. If we look at the anticipated increases for the next 12 months, we note that the average anticipated increases is almost equal to the Namibia banking sector at 6.5% for executives and management respectively. The table also splits the increases between TGP packages and Basic Plus packages. Also, we can note that the increases are more to the lower level staff than on executive level. Interpreting data is always interesting, so why would it be? Interesting to note that increases are more than the average CPI. Here we have the mandated pay adjustments for general and unionized staff from our survey data for the banking industry. Each participant is required to complete a questionnaire which asks what the increases were in the last 12 months and what the budgeted or mandated increases are for the next 12 months. The increases are split between TGP packages and Basic Plus. We can note that the increases are more to the lower level staff than on executive level. Interpreting data is always interesting, so why would it be? Looking at the increases that were granted for general and unionized staff, we can note that the banking sector's average increases are lower in comparison to the retail banking sector. For the next 12 months, the banking sector anticipates average increases rating between 6.2% and 6.8% for general and unionized staff. The retail banking sector's anticipated average increase for the next 12 months ranges between 6.2% to 7.8% for general and unionized staff. In comparison, the anticipated increases for banking and retail banking are equal for general staff, but higher increases are anticipated for unionized staff in the retail banking sector. In total, the anticipated increases for the next 12 months are less than the increases that were granted over the past 12 months for all staff levels in banking and retail banking. Also, increases are more than the average CPI. Looking at the mandated pay adjustments for executives and management from a survey data for the financial services industry, we note that over the past 12 months, the financial services sector granted average increases ranging between 5 to 6.2% for executives, and an average increase of 4 to 5.8% for management. This sector anticipates average increases of 4 to 5.8% for executives and 4 to 6% for management for the next 12 months. On the other hand, the financial services private sector granted increases at 3.5 to 6.4% for executives over the past 12 months, with only less on basic salary, but more on total package in comparison to the financial services private sector. For management, increases granted at 6.1% on total guaranteed package. If we look at the anticipated increases for the next 12 months, we note that the average anticipated increases are almost the same for Namibia Financial Services and Financial Services Private Sector, at 4% to 6.1% for executives and management respectively. Interesting to note again are that the increases are more than the average CPI. Here we have the mandated pay adjustments for general and unionized staff from our survey data for the financial services industry. As mentioned, please note again that the increases are split between total guaranteed packages and basic plus salaries. Looking at the increases that were granted over the past 12 months for general and unionized staff, we can note that there is only a slight difference in average increases between the financial services and the financial services private sector. For the next 12 months, the financial services sector anticipates average increases ranging between 5 to 6.8% for general and unionized staff. The financial services private sector anticipates average increases for the next 12 months ranges between 5.9 to 6.5% for general and unionized staff. In comparison, the anticipated increases for banking and retail banking are equal with the same range for general and unionized. In total, the anticipated increases for the next 12 months are less than the increases that were granted over the past 12 months for all staff levels in the financial services and financial services private sector. Increases are more than the average CPI on all these sectors. The question here is, when do you start budgeting? From our current participants in the sector, the following are the salary review months for the industry. The bulk of the industry grant their increments during January, March, April, August and September, meaning that most of the sector has uploaded and current data is now available. It would be safe to say for this industry, using the data as published after September would be the most relevant for budgeting purposes. Also remember, RemChannel has a projection tool which can be used to either project the market data on your own data with a desired percentage to see what the effect would be if such an increment was incorporated in the data. For the review month statistics for Namibia retail banking, we can see that the industry granted increments during January, March, August, and September, meaning that most of the sector has uploaded and current data is now available. From the review month statistics of Namibia Financial Services, the bulk of the industry granted increments during April and July, meaning that most of the sector has uploaded. Here it would be safe to say for this industry using the data as published after July would be the most relevant for budgeting purposes. For Namibia Financial Services private sector, this industry also granted increments during April and July. Again, it is good to know that Remchannel has a projection tool which can be used to either project the market data or your own data with a desired percentage to see what the effect would be if such an increment was incorporated in the data. The banking sector includes about 6,701 data points. Most employees' positions are to the sales function with the supporting services, meaning administration jobs, following. This merely shows which disciplines form the core functions of the business and which supplement the core function. The retail banking includes about 6,162 data points. Here, most employees' positions are also to the sales functions with the supporting services also following. The financial services sector includes about 8,991 data points. Most employees' positions are to the sales functions and support services. The financial services private sector has 7,316 data points. Most employees' positions are to the sales and support functions. As mentioned, this merely shows which discipline form the core functions of the business and which supplement the core function. Here we performed an analysis on age and gender for the banking industry. Age analysis is very interesting. 26 to 35 and 36 to 45 are the largest contributors. Why would this be important? I would ask, are these benefits offered appealing to these age groups? Are you catering for all, or is it an across-the-board application of benefits? We also see a large slice goes to the ages of 46 to 55. Interesting to note is that females dominate the industry at face value. This could be due to the nature of work required within the banking sector. The age and gender analysis for Namibia retail banking indicate that ages 26 to 35 and 36 to 45 are the largest contributors. Here we can also see that a large slice goes to the ages of 46 to 55 and that females dominate the industry here as well. Performing the age and gender analysis for the financial services sector, the same ages are the largest contributors as within the banking industry. The ages are 26 to 35 and 36 to 45. A large contribution also comes from the ages of 46 to 55 here. The age and gender analysis for the financial services private sector indicates 26 to 35, 36 to 45, and 46 to 55 are the largest contributors. Why is this important again? It is important to ask if the benefits offered are appealing to these age groups. And are you catering for all, or is it an across-the-board application of benefits? We note here, females dominate the industry at face value due to the nature of work within this sector. Here we have a comparison of the Southern African countries we have on the Remchannel survey. We would always assume that South Africa is the biggest payer, but looking at the graph, we see Lesotho actually pays more on average than the other countries. But now I would like to emphasize that this is extremely important, that when you benchmark, you need to know what data you are using and also try and interpret why the data is showing a different picture. The South African economy is 10 times larger than Namibia. So is it really a fair comparison or benchmark? You will see we are fairly on par with South Africa's retail market. On Botswana, no medical or pension, so it seems they pay very low, but we are not necessarily comparing apples with apples. With Swaziland is flat, but remember their political structure is very different. And with Lesotho, Most branches of South African companies, which are manned by South African expats who are paid incidentals and premiums to work in Lesotho. So know that you know what's in the data we use. It gives us a different interpretation of the data we use to benchmark. Here we illustrate the Namibia leading industries in comparison. Technical leads in the overall market by 43% due to the high influence of the mines. Mining is the clear leader in the market by 69%. Here we compare the remuneration difference of banking disciplines with other support disciplines for the banking sector. We can see that on average the banking disciplines earn a bit more than the other support services by 16%, and we see the difference increasing from skilled levels to professionally qualified. Here we compare the remuneration difference of the financial services sector with other support disciplines. We can see that on average the financial services discipline earn a bit more than the other support services, by 13%. We can see a difference in increasing from skilled levels to professionally qualified. We compare the remuneration difference for the financial industry between South Africa and Namibia. We can see that the two economies are relatively on par, however Namibia pays slightly more on some levels. Namibia is in a more competitive position on all levels. The reason could include a constant demand of skill sets within the industry. Here we compare the private sector versus the public sector, as this comparison is always a hot topic and managed to find its way to the newspaper headlines. The public sector remains in the lead with 14% over the private sector. If you look at the exponential lines, the maroon line representing the public sector is salaries are higher on lower levels and then lower on more senior levels compared to the private sector. This is an illustration from the Namibia National Markets paper discipline. Technical disciplines are paid above the rest, where IT would follow and thereafter safety officers, HR and finance related disciplines. Normally pay is linked to qualification, as well as the consequence of error. For example, where mistakes are made with distribution may be far less than those in technical positions. The analysis of this would indicate that one generic pay structure may not accommodate all disciplines, and from a pay scale perspective, you could consider having two pay scales. One for technical disciplines, which are the core functions of the business, and one for support staff. But this may cause admin issues as well as perceived unfair pay on same grade levels. Our next topic relates to the logistics of our service administration. Here we have our REM channel upload project plan. For our REM channel participants, you will be requested to do your REM channel upload a month subsequent to salary increases being granted in your organization. A grace period of 1 more month may be granted for uploading, after which your data and access from the system will be discarded until the upload is done. Please understand, we have several clients uploading monthly, hence any late submission causes pressure which could be avoided altogether. Please feel free to contact our team if you struggle with the process or need help to finalize the information required, instead of delaying the process altogether. Kindly note that the project timeline is shared well in advance for you to diarize every step of the upload process to meet the deadlines. There are 5 key dates, of which the 4th date is the submission complete stage. This is when the upload process must be finalized in order for your data to be included in the next month's publication. This deadline is the same across Africa and can therefore not be changed. Step 1 refers to the submission of the upload file. Please submit your upload file in the format required. You are welcome to contact our team should you have any queries in the population of the upload file. In step 2, we compare your salary data to your remuneration policies. Where the salary data does not correspond to the policies, we will provide you with the queries to ensure that validated data is included in the upload. Where required, the upload file is then updated for uploading in REM channel. In step 3, we compare your internal jobs to REM channel jobs, focusing on an 80% job match based on the job content, description, grade and qualifications that are used as a guideline in the exercise. During this step, we will also conduct a job audit process where we conduct a two-fold comparison. First, to the job individual is matched to, and second, to the grade the individual falls in. Where there is a disparity of more than 30%, either below or above the market data, queries are raised in order for us to understand why the salaries differ from the market data. Step 4 is then the end of the upload, and step 5, which usually takes place on the first Monday of the new month, will be when you can view your latest comparisons to the market. We request that you please provide all the requested information. The more you give, the more you can receive. As emphasized in the previous upload, please ensure that you stick to the deadlines in submitting the upload file. Once you miss the first deadline, you fall behind with the following deadlines. However, we are able to assist you if you are under pressure. All that we require is communication from your side. Furthermore, we kindly request that you submit your data in the required format. You are welcome to provide more information, such as additional columns, as to how the totals are calculated. It is just important that you indicate this to us, as the system will only accept the upload file if it is in the correct format. Step 3 touches on an important element, which is the review of data. Please ensure that another pair of eyes review the data before sending it to us. It is also advisable for the matching to be reviewed before sending it to us. A good idea is to always check your own salary data for accuracy. We kindly request that you please ensure that your contacts for Rent Channel remain updated, as we will not know who the correct contacts are if every step of the upload if you do not inform us of any changes. If your payroll person is responsible for the Rent Channel upload file population and your audit person for the matching, please inform us accordingly. We will also, as far as possible, ensure that the team manager is copied in to ensure that he or she remains in the loop of the deadlines and can assist if the relevant person is unavailable. Step 5 is one we often assist with, and this is to ensure you match to Rent Channel positions where there is market data available. If you do have any specific positions you cannot find market data for, please get in touch with us and we can assist with the alternative solutions. Due to the limited data pool available for CEOs and MDs, we encourage you to provide us with the required financial data in order to be able to obtain data for the positions. Please be reminded that you can only get data up to the highest level you provide the data for. We urge that you submit your CEO or MD data to ensure we build a comprehensive dataset for executive remuneration and benefits. Please be assured all remuneration data is dealt with as strictly confidential as part of the PwC Information Data Protection Policy. We would like to take the opportunity to expand the Rent Channel system criteria when it comes to population of market data. In order to obtain percentile data for a survey position, the system requires more than 10 data points matched to the position over at least 3 companies. Both criteria should be met before percentile data is generated. Alternatively, only average or mean data will be generated. This criteria is set to ensure that the data confidentiality of every company is maintained and to ensure the company identity is not compromised. In an attempt to remain the largest Namibian salary survey, we are always open to your suggestions on ways to improve or enhance the system. We offer training on how to use the system every second month during our user training sessions, which is included in the Rent Channel subscription. So please be encouraged to use this opportunity to ensure that you are comfortable to use the system. Due to the sensitive nature of the data included in the survey, you must update your password every 90 days. This can be done online. Please note that all communication and files shared from our office will be done through password-protected files. The password will remain the same for the full calendar year and will be shared via SMS or email. Should you extract reports and insufficient data is stated, please contact our office to assist with alternative solutions. Before we close off this podcast, we would like to share with you the pictures and names of our team. PwC's People and Organization team can consult and assist with a variety of HR-related services. We thank you for making the time to watch this podcast, and we hope to hear from you soon. Please feel free to contact any of our consultants should you have any questions or queries. Have a blessed week, and greetings from the Rewards Consulting at PwC.